Good evening, anyone, and welcome again to this second day of the SPAC conference about our SPACs, the new IPO. And today is the last day of the conference. I would like to thank especially one of the main organizers of this conference, that is the Institute for Global Law, Economics and Finance, that sits in Queen Mary, University of London Center for Commercial Law Studies. This conference has been prepared also in collaboration with University of Bocconi, University in Milan, and EDHEC Business School in Paris. And is of course sponsored by one of the top leading law firms in New York, specialized in SPACs, that is Ellenhoff, Grossman and Scholl. And we are very grateful to them. Today we just move into the SPAC arena, and especially into examining the regulation of SPACs at the European level. And for this reason, we have a stellar members of and panelists today. Among them, Professor Iris Chu, who is Professor of Company Law and Financial Regulation, Mr. René van Velkeren, who is Head of Listing of Euronext, and then, of course, we have Tim Jenkinson from the University of Oxford, and Mr. Ferdinand Mason of White & Case, partner in the London office of White & Case, and Filippo Annunziata, who is Professor in Financial Markets of Bocconi University. So for sure, this panel looks quite promising, and I think we are all interested to explore new possibilities of SPACs in Europe. And I just give the floor to Professor Iris Chu from University College London. Thank you very much.
Thank you, and good afternoon, everyone. I thank Daniel and Rodrigo for having me here today to give the keynote for the second day of this conference. I have to say I've not published anything on SPACs in particular, so thank you very much for thinking of me. However, I hope you don't mind me making an early advertisement at this stage to let everyone know that Ian McNeil and I are curating an up-to-date research handbook on global capital markets, and a SPACs chapter will be featured there. So hopefully this early advertisement will be welcome here. So today, in the 15 minutes or so that I've been given, I hope to say a few words about regulatory policy for SPACs, and I'll be sharing my slides shortly. I don't have many slides, so that should not be too cumbersome for people, I hope. Let me start the slideshow. Right, so my starting point is that we are aware that Lord Hill's review has suggested that capital markets regulation be adjusted in order to accommodate the rising phenomenon of SPACs. And the Financial Conduct Authority has started to consult on potential reform. The proposed reforms would likely bring us closer to the regimes for SPACs in the US. We may consider that regulatory alignment with the US may benefit us from the point of view of regulatory competition. But perhaps we may also wish to take a step back and look more into the market characteristics of SPACs at the moment, and consider what purposes regulatory policy may serve. SPACs have been described by many as publicly traded private equity. SPACs pull in funding through a public offer, hence allowing all types of investors, including retail investors, to buy a slice of private equity-like expertise. And such expertise can be put to identifying a promising private company, which can then be merged with the SPAC within a particular time frame, usually between 24 to 36 months. The growth of a promising private company into a marketable, publicly listed company can generate future value for investors. In this manner, the retail investor who participates in this can also enjoy the upsides, like private equity returns. So as a financial innovation, SPACs can theoretically serve the purpose of broadening out market access to private equity-like value creation as well as offer private companies a cheaper way to access the public markets without the need for a traditional, but usually rather expensive initial public offer. However, there are certain signs that empirical research has provided that may cause us some concern regarding some of the market characteristics of SPACs. First, I would like to share a slide regarding some empirical research on private equity findings. Empirical research has shown that private equity is able to generate quite significant investment value. And I quote the work of Beisinger and his team in 2020, who show that private equity funds adopt hands-on engagement with their target firms in order to tailor strategies for growth, engage in governance engineering, as well as financial engineering, such as better management of cash flow, in order to improve the operational performance and profitability of their companies. And in 2019, the FT reports that private equity generates investment returns in average of over 11% for investors in the UK and the EU. So the question is this what SPACs investors can expect? There is recent empirical evidence by Klausner and his team who find that investors in SPACs that continue to hold through the merger may suffer the risk of losing out in long-term value creation. And share price can be down by as much as 51% in the 4-year period of the merger. Indeed, such evidence is not dissimilar to earlier empirical research on SPACs that were conducted before the global financial crisis. And a lot of empirical evidence seems to show that post-deal performance is on average rather lackluster. So if empirical research has been available since before the global financial crisis, why are SPACs enjoying a recent boom? And should regulatory policy facilitate such market developments? I would like to suggest that we look at the supply and demand side characteristics of the SPACs market in the recent boom and consider what implications these have for regulatory policy. Now, of course, I stand corrected by the practitioners who are here, because much of my evidence is evidence that has been sourced from the public domain and from research. On supply side drivers, I looked into who is involved in sponsoring and promoting SPACs and the recent boom. It has been observed by commentators that SPAC sponsors and promoters are generally a combination of industry executives and alternative non-bank financiers. Many of them are also engaged in private equity and hedge funds. And it may be no coincidence that private equity funds have experienced outflows in a couple of years leading up to the pandemic and during the pandemic, as this chart shows. And this is not my own chart. This has been sourced from elsewhere, as indicated on the slide. So inflows into public equity markets, however, have been turbulent, but seem to be booming during the pandemic and at the moment. So although SPACs have been around since before the global financial crisis, I do wonder if the recent boom may be attributable to the supply side, predominantly alternative non-bank financiers seeking opportunities to attract inflows where their main or established lines of businesses have experienced turbulence. In terms of the demand side, it has been observed that many investors in SPACs are institutional or private family wealth or sovereign wealth investors, as well as hedge funds. Retail participation, however, remains a relatively small slice. There is also empirical research by Rodrigues and his team that document how the terms for investor relations in SPACs reflect an increasing short-termist preference on the demand side. So it is therefore queried whether the dominant group of financial institution investors in SPACs on the demand side may be seeking short-term yield through financial engineering. And this may provide some food for thought in terms of what regulatory policy should best be advanced by our regulators and policymakers. So Rodrigues and his team show that before the global financial crisis, investor relations in SPACs were structured in more relational terms. So for example, having a relatively low threshold for investors to veto a merger. In recent years, the terms for investment in SPACs have evolved and changed. And the three large US exchanges of AMEX, NASDAQ, and NYSE have converged upon increased investor protection, but in predominantly financial terms. So investor protection is focused on financial protection, such as having the escrow requirement for proceeds that are raised, and the facilitation of easier investor exit by a request for redemption at the point of the merger. On the other hand, the threshold for investors to veto a deal seems to have been raised. So in some cases, investor approval may be unnecessary because exit rights are strengthened. So in other words, investor protection comes largely from exit and not voice, and that is the main contention and the thesis by Rodrigues and his team. Such a preference for exit arguably can be aligned with a yield-seeking agenda that is more short-termist in nature. Many SPACs investors, such as hedge funds that hold warrants, often seek to redeem at the point of merger when share prices peak. It has been reported that the average yield for investors at that point is at an average of 11.6%, and that is very attractive. However, investors who hold the SPAC stock post-merger may still experience the risk of negative yields, as some of our recent empirical research that I have shown earlier has discussed. Sponsors or promoters for SPACs are reported to seldom take hands-on strategic or governance roles in the merged entity, unlike in the case of private equity deals. So in this sense, it is queried whether SPACs are one-shot deals designed to maximize short-term yield for many of the institutional investors before the merger, with relatively less thinking with regard to the long-term value creation and the nurturing of the merged entity. Indeed, empirical research shows that merged entities perform better post-merger if governance arrangements are made between the SPAC sponsors or promoters and the merged entity. So looking at some of these supply side and demand side characteristics, one question would be, are SPACs chiefly a form of financial engineering that serve the needs of financial institution investors? Or is this really a form of efficient capital allocation that can potentially grow promising small companies and offer retail investors a long-term return through real and productive value creation? Should regulatory policy facilitate SPACs because there is a market appetite for it and we offer standards that the markets prefer? Or should regulators take one step back and ask what SPACs are promoting in terms of real economic value creation? Some commentators have over the years talked about how the financial sector lobbies regulators for regulatory policy that fits their market preferences. So is regulatory policy for SPACs in the UK another reflection of this? In terms of the EU's or the FCA's role in designing regulatory policy, should it be borne in mind as well that the regimes in the US have been developed out of exchange competition, and hence these regimes are likely to be more market-facing in nature? The recent SPACs boom should provide an opportunity for regulators to consider the purpose of law and policy, besides facilitating what the market wants. Although, of course, I have to mention that Daniel's excellent monograph argues that SPACs will be a lasting and important fundraising phenomenon, I wonder how the empirical research that I have trawled may raise some questions as to what sort of regulatory policy that we would support and whether SPACs may be a passing fad. So I'll conclude with two thoughts that may seem at first blush to be contrary to the policy that the FCA is consulting on and pursuing. First, should the FCA promote investor protection in SPACs by introducing a similar right of redemption or buyback as is found in the US regime? The emphasis on exit may promote a type of short-termism. And even if exit serves a form of investor protection, the question is whether it should be incentivized or disincentivized. And in this respect, I'm thinking of the broader picture in terms of how hands-on SPACs sponsors and promoters should be in relation to the merged entity in order to generate and continue in terms of long-term value creation for investors. Should there be incentives to nudge SPAC promoters and sponsors into longer-term governance relationships with their merged entity? Second, should regulatory policy target perverse incentives such as conflicts of interest or bad merger decisions as the time ticks down for SPACs? There is quite a significant amount of behavioral literature on SPACs that discuss the incentives towards any merger over no merger as time ticks down. So in the face of such incentives, is it optimal that regulatory policy favors an individualistic approach for investors in terms of redemption, rather than a collective approach that disciplines the wisdom of the merger choice? So it may be argued that regulators should leave to the freedom of investors' commercial decisions. But the retail investor, if participating, is often not as savvy as the professional or the financial institution investors. So I would argue that there can be some scope for taking a step back and thinking more about regulatory policy in relation to the purposes that SPACs may serve, especially in relation to long-term real productive value creation, as well as the needs of investor protection amongst the different types of investors who may be involved. So I hope that these remarks may be able to provoke some really nice discussion in the presentations and roundtable after this. So thank you very much for your attention.
Thank you very much, Iris. Thank you. I think it was very interesting because even just to connect to what we said, for example, yesterday, one of the points was actually the creation of value at the SPAC phase. So we question why and what are the ways also to create value, especially at a moment that is not the SPAC moment, because the SPAC moment, I mean, it's just a sort of IPO where the units are issued at $10 per share. The problem is really after, so in the SPAC phase. And one point that we said also was the possibility that SPACs, they could, not SPACs, but like more target companies, they could include forward-looking statements. And so we said that possibly this creation of value, yes, we reached something very similar to your conclusion in the sense that we should differentiate the regime between institutional investors that are more sophisticated, retail investors that are less sophisticated, although the role of retail investors in SPACs, I would like to say, is always minimal, because I mean, once there is like an IPO of 300 million, the smart money are always in the hands of hedge funds, as you even correctly said. But that I agree completely with you. I mean, in the sense that the purpose of SPACs is really the key. So depends what kind of company I'm going to acquire, and also what type of value I want to create, and who are my investors. So if there are more retail investors, it's right that there is more disclosure, it's right that there is more protection for those people. Absolutely. So thank you very much. Very, very, very nice introduction, and very well connected. Also, if you didn't have the chance to see the yesterday conference, was perfect. Really, I'm very impressed. Thank you very much. So we can move on in the next presentation. and that I think is very practical point of view, but very, very important, because Amsterdam in this moment and even Paris recently has seen on Euronext one of the biggest SPACs in Europe. So I just give the floor to Mr. René van Belkeren, who is the head of listing of Euronext Amsterdam. Thank you very much to join us. We are honored, René.
Well, thank you, Daniela, and thank you for the invitation to present the views of Euronext Group and also Euronext Amsterdam on SPACs. I hope you can see my screen. I'm currently sharing my screen.
Yes, we can.
Yes, okay, that's great. So it has the title slide, Euronext and SPACs, and this is a picture of the trading floor at Euronext Amsterdam. Now, to put things a bit in perspective, perhaps I don't know if everybody knows Euronext as a market operator in Europe. So this slide is more about a general introduction. Who is exactly Euronext and what do we do? So Euronext is a pan-European exchange, a market infrastructure that is facilitating the functioning of the capital market in Europe. And we think that we are the leading pan-European exchange. If you look at the total money that is being raised on Euronext markets, the total number of companies that we have and the total market capitalization of our market infrastructure, you see indeed that we are the leading pan-European exchange. Some 1850 companies are currently being listed on Euronext markets. That includes Borsa Italiana, as you probably are aware of. We recently acquired Borsa Italiana, so the Italians are now part of our pan-European family, which we are very proud of, because it basically concludes for a large part the map that we were looking for to create a pan-European market. And we are present in 15 countries, including 7 listing venues. Those are the green, the dark green countries that you see. And we serve more than 6,000 institutional investors from all over the world. And that is actually one of the reasons, and that is also the reason why I'm showing this slide, because as you probably know, there are many SPACs currently being listed on Euronext, and sometimes we still get a question, why is that? And why does Euronext facilitate such an active SPAC market in Europe? And then not only, let's say, the Italian market, which has always been extremely active on issuing SPACs, but we see also now that in France and specifically also in Amsterdam, we really are developing a sustainable SPAC market across Europe. And the reason for that, one of the reasons for that is that, of course, the sponsors of the SPAC, but also the companies that will be de-SPACed or will be acquired by a SPAC, they are looking for an optimal access of the global capital market, both from an accessibility point of view, but also, let's say, in the dynamics and the mechanics of the market where they think they should be listed. We have a very strong emphasis on technology companies. Over 650, 670 technology companies are listed on Euronext markets, of which on 1,400 companies are SMEs. So this is basically what Euronext is, and it was quite important also to give this general introduction, because that very much relates to the activity that we currently have on our markets on SPACs. Now then, if you look at the landscape in Europe compared to the US, I would like to say a few words on how we see the market developing over the last few years. The US compared to Europe, of course, we need to start out by assessing the US SPAC market. Since 2005, we have seen that some $250 billion are being raised by SPAC, specifically in the years 2020 and 2021. The US SPAC market has shown an enormous amount of capital that was being raised, specifically in those sectors like technology and healthcare. Most of the SPACs that we have seen are really focused on doing acquisitions in those sectors. And we have also actually seen a number of these SPACing acquisitions being done specifically in those sectors this year and also in last year. So the US is really leading the global SPAC market development. However, what we have seen in 2021, and there are some reasons for that, is that the US SPAC market is clearly showing signs of cooling down. That is not only the case because already a lot of capital has been raised by issuing SPACs. There is a lot of M&A capital just being sidelined, looking for good acquisitions to be done. And you see that the typical participants in US SPACs, that they are now refocusing from the US into other regions, including Europe, because they feel that, okay, the US is rather full with the number of SPACs that are looking to acquire companies. And there is still quite some opportunity in the Europe, so why not move from the US into Europe? And that is actually what we have seen in the last few months. So far, we have 12 SPAC listings on the Euronext markets. You see that indeed the momentum in Europe is really building up. Of course, not similar at the same level as what we have seen in the US, but with 2 more SPACs that are recently being announced, bringing the total number to 14 year to date, with an average deal size of 250 million, with a lot of US sponsors also hitting the European market. We feel that the momentum in Europe is still developing. We are definitely gaining momentum. We are still not there where the US is. And actually, from a Euronext perspective, we should not have the ambition really to become at par with the US. The capital market in Europe is much smaller than in the US. It works in a different way. There are different dynamics. There are different investors who are dominating, let's say, the capital that is being invested in European listings. And actually, I'm quite comfortable that we are still far behind the US because actually the numbers that we have seen in the US so far, I'm quite doubtful that will, in the end, also develop into a more sustainable market. And I think that in Europe, we have good fundamentals that we can certainly develop a sustainable market, but not at the same level as what we have seen so far. But of course, if you look at the mechanics and if you look at the technical elements of SPACs, you see that also in Europe, it's quite a comparable SPAC market as in the US. If you look at the structuring of any SPAC that we have seen so far in Europe, it's fully aligned with the structures that we have seen in the US, basically. Of course, there are some specialties in there, specifically if you look at the sponsor reward, or if you look at the redemption versus the shareholder voting and other certain elements. But in principle, you see that the European SPAC market is closely following the US market. Also, if you look at the target sectors that are currently on top of any sponsors list to do acquisitions. It's mostly about tech. There is some health tech involved. It's about ESG, it's about fintech, but of course the technology sector is very much in favor in the number of SPACs that we have seen so far. Now, of course, in the US, there have been some developments which also very much influence the development of the European market. You just mentioned about the financial projections in a way that, of course, the SEC in the US has stated that forward-looking statements, the possibility of having forward-looking statements in SPACs and not in a typical IPO, that is something that needs to be investigated. Is the regulator in the US still quite comfortable with that? And actually, a number of regulators that we speak to in Europe as well are also looking at this specific element. Do we need to be more strict on that? Do we need to be more in line with what the SEC is currently investigating? So this is definitely something which attracts a lot of attention, not only from the regulators, but also from ourselves as a market operator, and more importantly, also from the sponsors. So what is going to happen with this? Is this going to be a feature which will be in place also for the longer term? Or could we expect any changes including that? And I think that same goes also for the financial reporting changes, in a way that the warrants, which are currently being seen as equity for most of it, or specifically also in Europe, we still see the warrants as equity, will now be classified as liabilities. So that is definitely something also that, of course, attracts, let's say, the attractiveness or involves or influences the attractiveness of a SPAC in general. We see a lot of listings that have been taking place in 2020, like I said, but in 2021, specifically in the US, and you also see some momentum decreasing at Euronext markets in the last few weeks, you see the number of listings actually decreasing a bit. So that also has to do, of course, with the seasonal effects. We're just about to enter the summer period, so it's not good and not ideal to tap the market just before summer. But certainly the momentum that we have seen in the first few months of the year has slightly decreased over the last few weeks. And now the question is, will that get back after the summer period? Will the US really go into a next round of SPAC listings in the post-summer? And how is Europe actually going to develop? So some retreat of the market is good because it basically puts us with the feet on the ground and gives us time really to assess what is going to happen for the long term. But clearly we have seen some momentum decreasing in the number of listings. And also because there are less SPAC mergers, de-SPACing that has been taking place. Of course, the pipe funding has also reduced here and there. And one important element that also came across recently is, of course, the initiation of a SPAC. So the SPAC with certain rights attached to that, which was initiated by Bill Ackman, which acquired 10% of Universal Music Group. As you know, Vivendi needs to spin off Universal Music Group. They intend to list Universal Music Group on Euronext Amsterdam post-summer. And prior to that, they made an arrangement with the SPAC of Bill Ackman in acquiring 10% of UMG in a special purpose acquisition rights company in a SPAC instead of a typical SPAC. So that is also something which will definitely also influence the SPAC market in Europe, constantly trying to develop new ways of creating momentum and building a track record. Now, if you look at the market on Euronext Amsterdam and Euronext, we have seen 12 SPAC listings so far with 2 SPACs in the short-term pipe. So that would mean that in the next coming weeks we will hit the 14 mark. And if you then compare that with the record SPAC year that we have seen in 2017, which was mostly dominated by Borsa Italiana and by London Stock Exchange, I'm quite confident that with the momentum that we talked about, that 2021 will surpass 2017, and which will form then a good basis to develop a sustainable SPAC market in Europe. And fortunately, most of the SPACs are currently being initiated on Euronext market, and that has a certain reason for that, and I'll explain that later on. And what is very important to mention as well, if you look at the money that is being raised via SPACs over the last few months and years, and you compare that indeed with let's say the SPAC market of let's say 5 to 10 years ago, the total average deal size that we have seen has clearly increased quite a bit, and where we typically have approximately 300 million SPACs that are being listed on Euronext. And you see quite a difference with the other markets at this point of time. Now, then a few words on why does Euronext, or let's say, put Euronext as a market infrastructure for facilitating a European capital market. Why is Europe so attractive to issue SPACs? And how does that compare to the UK? And how does it really compare to the US? And I think there are key elements why sponsors believe that the European capital market is a great market to issue SPAC, to raise capital, and look for acquisitions that are then, by doing the de-SPACing, will be listed on Euronext markets. It first has to do, of course, with the offering structure. So the offering structure that we have seen so far is very much copied to the US model. So that means that we are very much aligned with the US model. Also, if you look at, for example, the governance structure of SPACs, and you look at the sponsor capital post the IPO, so the sponsor promote in relation to the commitment that the sponsor stake following the actual de-SPACing, it is very much aligned with the US model. There are certainly a certain number of advantages why Europe is being seen as more attractive currently than the US. Of course, that has to do with the fact that we are far behind the US SPAC market from a capital raised point of view. So there is still a lot of capital waiting to be put at work There is a lot of appetite in the European market to participate in SPACs, not only the typical SPAC participants like hedge funds and private equity and the more trading-oriented and opportunistic kind of investors, but what we also see is that more and more typical long-only investors are becoming more open to participate in SPACs, and even more so to participate in pipes. And that is extremely important. So the dynamics of the funding at the European level is more in favor of the SPACs itself, but more importantly also for the company that will be acquired by SPACs than in the US. And that is definitely something that attracts sponsors, but also companies to become active in that field. While the European market has proven to be a very open, very internationally oriented kind of capital market, where specifically Amsterdam as a stock exchange is being perceived as very international, very issuer-friendly, a very supportive listing regime, which supports not only the SPAC itself, but also the companies for the longer term. So there are definitely some advantages if within Europe compared to London and the US. And of course, you have some more technical issues which are currently being discussed in the UK and possibly could be changed following the Lord Hill consultation. But we all have to see if that is indeed the case. And that really relates very much, let's say, to the treatment of SPACs being considered as cash shells, the fact that you need to hold trading at the moment of the acquisition announcement until the actual issuance of the prospectus, which is not the case in Europe, but it is still the case in London. And of course, also the whole debate with respect to dual class shares, which are still not allowed in the US, in the UK, sorry, to enter the premium segment. But it is definitely allowed in Europe and also in Amsterdam to issue dual class shares on Amsterdam and still being eligible to be included in the index. So there are certainly some key reasons why Europe is being perceived as a friendly SPAC climate. Well, this very much relates to the attractiveness of Amsterdam. And like I said, in the international ecosystem, Amsterdam is being perceived as a very local market with a very international global presence. So that means that we have a very close and very condensed local ecosystem, which is also being facilitated by international advisors and international banks and brokers who are facilitating that market. It's very condensed, it's very close, it's a very let's say intense relationship that we have with those parties. So we exactly know what's happening in this market. However, we are very globally oriented. So that means that when a company is being acquired by a SPAC and by doing so, it's getting listed on Euronext Amsterdam, we can ultimately facilitate them in accessing the global capital market and the global liquidity pool. Some 90% of all the blue chips which are being listed on Euronext are being invested by international investors. So we are clearly less dominant locally as from an investor point of view, but we are very dependent on international capital. And of course, for SPACs who want to raise money internationally, of course, that is a very important element to that. We have a very friendly listing regime for both SPACs and for the IPOs which follow on to that. We treat any SPAC as a typical IPO. So that means that we do not have any specific listing requirements for SPACs. And we make a certain exception on the 3-year financials under IFRS obligation that any IPO on Euronext markets have. And to balance that, we do an extra thorough check and balances on the reputation of the SPAC sponsor, on the track record, on the financial stability of the sponsor, and so on. But actually, we treat any SPAC as a typical IPO, and that is a clear advantage because we do not show them any funnies or any specialties that they need to work with. So that is a very important element to that as well. And this actually shows, let's say, the treatment of SPACs. So SPACs are treated as any typical IPO, except, like I say here, on the financial track record. Now, what is important to develop a sustainable SPAC market in Europe? Again, this is the Euronext perspective. So how do we see this market developing? Well, first of all, you need to look at the advantages and the risks that are attached to SPACs. And the advantages, the pros and the cons for SPACs, they very much relate, of course, let's say, to the issuers of the SPACs, the sponsors. They very much relate to the investors participating in the SPAC. And it also very much relates to the companies that are being acquired. And so let me touch upon a few elements of that. Well, first of all, it is a great opportunity also for smaller companies, right? Because smaller companies, what we see as Euronext, find it more and more difficult to enter the capital market from a preparation point of view, the regulatory point of view, the documentation, but also the access to capital. And more investors, institutional investors, are becoming more focused on the company that they want to be invested in. And they look at the liquidity, they look at the market cap, and they refrain from being too active on SMEs, for example. So they are becoming more strict and more disciplined. So that means that a typical IPO for certain companies is just a bridge too far. And a SPAC can be a great alternative route to market for companies who have tried to access the capital market in a traditional manner, but have been unsuccessful, but are still quite interested and willing also to become a public listed company. And for that reason, a SPAC can be a great alternative. Like I said, and what we see is that the participation rate of institutional investors in SPAC is growing constantly. We not only see the typical participants, but more and more we see also the typical traditional long-only investors having an open eye for SPACs and looking at the opportunity. Of course, there are some elements that need to be adapted and need to be changed to favor the more traditional group of investors, but at least we see that investors are becoming more open to it. We also see that non-professional investors like retail is becoming more inclined also to participate in SPACs. You can question if that is reasonable and sensible to do so. And most of the SPACs that we have seen are doing a private placement and not a full IPO. They want to stay away from having retail participating in that SPAC. However, of course, retail can still participate in the secondary market, and certainly we do see that certain retail investors are actively participating in the market. And so that is an important point. The pool of capital is really growing quite nicely. Then, of course, if you look at the side of the target company, doing a listing by being acquired by a SPAC provides the company more certainty on the valuation of the company. When you are sensitive to the market by doing a typical IPO, the market decides what your valuation of the company is. By being acquired by a SPAC means that the target company is basically fulfilling an M&A process with the SPAC, right? So, and because there are so many SPACs in the market, it actually develops as a sort of a seller's market, right? So the companies have many SPACs to choose from. So that means that the selling power is really at the side of the target company and not so much at the side of the sponsor. So that gives definitely more comfort also for target companies to look at SPACs instead of preparing a typical IPO. And what is typically also the case, of course, because it is an M&A transaction that you're doing, which will also include a PIPE transaction, the cost of capital is basically lower. So if you need to prepare a typical IPO, you're a smaller company and you need to prepare a typical IPO, and the cost of capital is somewhere between 6 and 9% on average, where the cost of capital and the cost of equity actually of a SPAC transaction is much lower than that. So it's quite more in favor also of the target company to finance themselves by being acquired by a SPAC, make sure that there's going to be a PIPE there and then build from there. Now it's all so those are the positives, but it's not all heydays and holy grails. There are definitely also some risks to SPACs. First of all, from an investor point of view, you really are investing in the track record of sponsors. That is quite important. I believe that any success of a SPAC fully relies on the track record of the sponsor. If the sponsor will be able to attract a decent amount of SPAC participants and raising the capital by itself and not being too dependent on the banks and the distributors of that SPAC, so that means that they are able to convince the investors about their track record and about their ability to do firm acquisitions. I think that is a very important element of the success of the SPAC, not only at the side of the listing, but also during the lifetime of the SPAC and the actual de-SPACing. Clearly, there is some uncertainty with relating to the cash that is available. It's all about dilution, and some of the regulators in Europe are quite careful about that. So that means that if a pipe will be included in the SPAC transaction on the de-SPACing, of course, that will dilute the original SPAC holders. So there is a lot of debate also in the market, again, specifically focusing on the traditional investors, that the potential dilution effect should be communicated quite clearly in the prospectus and in any communication. That is a very important element also to look at. Of course, there is high pressure on the sponsors and the SPAC management. Like I said, there are many SPACs in the market. It is a seller's market, and still the sponsors need to deliver in the 24 months time frame. So there is a lot of competition there. So that means that the quality of the acquisitions could potentially dilute, which is a risk also for an exchange like Euronext, because that will mean that the quality of the companies that will be listed in the end is less than, let's say, what we are looking for. The conflict of interest between the SPAC sponsors and the shareholders. It's being debated quite frequently. What is the sponsor take compared to the potential investment return that the SPAC shareholders can make? Is that in balance? And so we also have seen that a number of SPAC initiatives that came across have changed the 20% compensation, where they are basically putting certain thresholds in that potential compensation and put some layers in there. So that is becoming more in favor of the traditional investors who are willing to participate in SPACs, but would like to see a bit more balanced investment return compared to the SPAC return. And a very important element that we also very closely look at, but also where the regulators is very firm on, not only in the US, but also in Europe, is about the IPO readiness of a company. So any company that will be acquired by a SPAC needs to be IPO ready, both from a governance, accounting, legal and compliance point of view, but also in relation to investor relation. Is that company fully aware of what it means to become a public company? Because again, we talked about the success factor of a SPAC, which fully relies on the track record of the sponsor. I think that also the success of a SPAC is being proven by the IPO readiness of a company that is being acquired, and from there starts to be a listed company. And of course, there are also some factors, some building blocks that are necessary to build a sustainable SPAC market in Europe. So far, we've done quite well. Again, we are the SPAC market is in Europe is far behind the US, which is great because we are gradually building a SPAC market in Europe. But from our perspective as Euronext, there are still a few elements that we really need to look for quite carefully also to really develop a sustainable SPAC market in Europe. That is the ambition that we have. We find SPACs a great alternative for a traditional IPO, and even more so for an investment by private equity or venture capital, because it's our ambition as Euronext to facilitate the capital market in favor of companies that are accessing capital market, because we know that a traditional IPO is becoming more and more difficult for certain group of certain group of companies. We see that SPACs can be a great alternative. So we really look forward in trying to develop that. But by doing so, we really need to build on a few elements. And that is about, first of all, the sponsor quality. I already mentioned the track record and the reputation of the sponsor teams. That is extremely important. It's about having the knowledge and the expertise in the sector that you want to be active in. At the same time, we also need to make sure that sponsors are really initiating SPACs by its own initiative. And what we have seen recently is that there has been some matchmaking in sponsor groups, which are then planning to issue a SPAC, but perhaps are not intrinsically motivated really to do so, right? So they want to jump the bandwagon, they want to use the opportunity also to be present and to be active. But the question is that really sustainable? Is that something that we are looking for? Like I said, the quality of the investor base is a very important, crucial building block as well. It's not only about the typical SPAC participants, but it's also in making sure that a wider group of investors is participating both in the SPAC and in the PIPE. The traditional investors who quite understand the product as it is, but sometimes are still doubtful in which bucket they can put a SPAC investment. Is it a specialty? Is it should it be in the equity portfolio, or where should it actually be located in their portfolio? But the quality of the investor base and the let's say the distribution of the investor base is quite important also to make it a sustainable market. Then it's of course about the IPO readiness of targets. I think that a lot of education is still needed for companies to understand what it means to be acquired by a SPAC, and by doing so, be a public company. That is something where the companies really need to be guided on. The companies need to be supported in making sure they do the right things on the right moment, they act according to the rules, and they comply to the conditions. And then we have the secondary market trading and the harmonization of rules. So those are also two important elements that still need to be worked on. So my feeling is that yes, the SPAC market is definitely something that we can develop further. The fundamentals are great. Also, if you look at the side of the secondary trading, you see that there is quite a good distribution on secondary trading activity in the SPACs that we have seen so far. But there are still definitely some things that need to be done. So yeah, that is what I had to say about the SPAC market from the Euronext perspective. I don't know, Danielle, if there are any questions.
Thank you very much, René. I think very interesting perspective on SPACs in Europe and of the group Euronext, and thanks also for the kind words on Italy, that we are part of this family of one of the biggest pan-European financial markets in the world, that is called Euronext.
Absolutely.
So, for sure, our pleasure, and we are honored to be part of it. And actually, was very interesting that you touch upon the fact that possibly is something that I was even seeing, that European SPACs, in terms of sponsorship, they seems to be more creative in comparison to America. So like you mentioned, the possibility that this compensation scheme, where there is this criticalities of the dilution on the side of the shareholders, then is superseded actually by SPAC sponsor like Jan Osborne, for example, that has sponsored one of the biggest SPACs on Euronext Amsterdam. Then we had also our Italian Mr. Arietti, yep, that has a new rechargeable SPAC. So following a little bit the model of Ackman. So in some way, I mean, do you see that possibly maybe the fact that Europe, is true that we have diversified regimes, so 27 member states in terms of corporate law, but this is giving the right flexibility to the SPAC market then to soar. What do you think?
No, I think that is actually a point that I make in the slide as well. I think that if you one of the building blocks for building a sustainable SPAC market in Europe means that across the Euronext, but also the European countries, actually, there is more harmonization. Right, so if we focus again on the Euronext markets, I see an enormous amount of differences how the local regulator in the Netherlands is appreciating SPACs compared to Belgium or France or Italy even, or Scandinavia, for example. The regulator in Norway is very hesitant in allowing SPACs on its local market because they are mostly concerned about the non-professional segment participating in the instrument, not knowing what they actually are participating in. Now, in the Netherlands, we have a regulator who understands the product quite well and who can make a good assessment about the risks that are being attached to SPACs also for the non-professional investors. But there is an enormous difference between the local regulators in Europe. Now, if you want to create a European SPAC market, that means that there should be more harmonization. That doesn't mean that there should be one European SPAC regime in place, because that is an illusion to think that will be the case. However, there should be an understanding and an appreciation of the instrument as such. So it's very much also about educating the local regulators, educating the local ecosystem, and educating and informing, let's say, all parties that are involved in, let's say, having a mind on the instrument. So that's also so the organizations who are safeguarding the interests of retail investors, for example, they also need to understand exactly what a SPAC is, so they can translate a SPAC into the risks that are being attached to it also for their local group. So it certainly is the case, Daniela, that I think we are definitely getting there. We see good momentum. But I'm a strong believer that if we really want to create a sustainable market, there should be more harmonization across Europe.
Thank you very much. Thanks, very interesting perspective. And I think we can pass to the second other speaker of today. Sure. And I thank you very much for your interesting presentation. And then I'm sure there will be other opportunities to be in touch.
Yeah, absolutely. Thank you. Thank you.
A pleasure. So guys, we go on the second speaker, third actually, speaker of today. And it's my pleasure to introduce you Professor Tim Jenkinson from Syed University of Oxford, who will give us a very good view today because he will answer a possible question, are SPACs here to stay? Thank you very much, Tim.
Okay, well, thanks very much. Nice to be here. To answer whether SPACs are here to stay, I'm going to start by looking a little bit further back, because whilst SPACs are very much a phenomenon of the moment, they've been around for a while. And indeed, the first time I got interested in SPACs was in the last wave. And that way, SPACs essentially come in waves over time. And the last wave, certainly in the US, was a very strong wave up until the financial crisis. So in the 2000s through to 2008, there was a very large number of SPACs, pretty similar to, maybe not quite as extreme as it is today in the US with a huge class of SPACs, but there was the majority of the IPOs that were happening in the US in 2006, 2007 were SPACs as well. And I'm going to start off by just making a few observations about what we learned from that, because the problem we've got at the moment is we don't really know what the outcome of this is. That we see a lot of SPACs happening in the US. We don't know whether these are going to be good for investors or bad for investors, because at the end of the day, whether the SPAC market, SPACs are here to stay, is a function of whether people make money or not. And if loads of people make money and a few individuals make tons of money, it won't persist. And so I think it's instructive to look a bit back at the past. Now I'll start off with that and focus on sort of three different groups here. So are they good for investors in the SPACs? Are they good for the target companies that are subject to the SPAC? And are they attractive to the sponsors who actually put these things together? Because there are other ways. Some of these sponsors are actually choosing to do SPACs rather than other things. Like, some of them are hedge fund managers like Bill Ackman, some of them are venture capitalists, like Reid Hoffman, some of them are private equity guys. So they've got alternatives. And so I think that it sort of has to be sustainable, it has to be attractive to all three groups. And so maybe I'll just talk about those three very briefly. So what about for investors, for potentially you and I, what are they attractive? And I have to say that if I've been involved in a lot of academic conferences recently on SPACs, having had virtually none for about the last decade, and I don't think there's any topic upon which people are more misaligned. In other words, that you get more extreme views. I think that there's about 50% of the academics I come across think of these as little better than a Ponzi scheme. And they're wondering why on earth do investors participate in this? And the other 50% think of them as an interesting, potentially fairly low risk with optionality as a sort of asset class. And just to put my cards on the table, I'm sort of in the latter group, actually. I think that these, if you're careful and you realize the potential for conflicts of interest here, they're actually potentially quite attractive to investors. And the reason for that is that they are, that they're potentially relatively low risk, but with a significant upside. Now, what do I mean by that? And what I mean is, as it's been discussed in other parts of the conference, until the SPAC actually finds something to invest in, you basically can get your money back. And then the critical thing about SPACs is you see a share price response once a deal is announced. And the academic work that I did on this essentially said that's your most important piece of information you're going to get. Once the deal is announced, see what happens to the share price. If the share price doesn't respond and you've raised $100 million for an acquisition and the share price doesn't respond, that's sort of telling you that this is not necessarily a good deal, because you can get your $100 million back if you want to. And it's sort of saying that there is no real upside to this deal. But if the share price jumps when the deal is announced, people clearly, after a while, people clearly think this has value. And that's quite instructive about what will happen if the deal is ultimately voted through. And what we did in our research in the sample up to 2008 is we essentially tracked these SPACs for years afterwards, after they happened, and confirmed the fact that those share price jumps were extremely informative. And in fact, we found that, if you listen to the market and essentially when the share price didn't jump, you just asked for your money back. You voted against the SPAC and got your money back. And most of the time, or many of the times, they would have then not completed. But even if they did complete, if you just got your money back, that was a good thing to do. And if you just backed the ones where the share price jumped, then you made money. And indeed, this was what I mean by a relatively low risk with a high upside, because those share prices that we saw sort of on announcement were actually instructive of the value of the company, as you'd sort of expect if you believe markets work. The real question is, if you're asleep at the wheel and you just want to believe, so Tim Jenkinson puts a SPAC together, you want to believe that I'm a good entrepreneur, great sponsor, I come along with any deal and you're prepared to back it, you'll lose on a lot of those companies. And roughly speaking, what do I mean by a lot? What we saw in the wave before 2008 was about 50% of the SPACs lost money, and lost significant amounts of money. If you were asleep at the wheel, you got 50%, you lost your money on 50% of the deals. And if you didn't, if you were active, you made good, relatively low risk returns over that period. So that's what I mean by, I think that they're actually quite attractive to investors if you're careful. And you realize that there is a decision you've got to make, because one of the great things about SPACs is it's sort of doing like a private equity deal where you get a choice about whether to do it or not. If you're an investor, institutional investor, thinking about investing in a private equity fund, you have to commit your money and you get no choice over what happens next. You don't get a choice. Here you do get a choice. So I think for retail investors, they're quite attractive. For institutional investors, they're a way of participating in some quite high growth private companies who then become public very sort of immediately. But you get a choice in that. And I think that makes them attractive if you're careful. Having said that, there are huge conflicts of interest here. And so, the sponsor, the promoter of these things will make money even if you don't. And that's an unusual situation in financial terms, to have a remuneration scheme, which means that the promoter can make money even if the investors make losses, and serious amounts of money, because they get 20% or perhaps less of the equity. So I think you have to be very, very aware of those conflicts of interest, and that's one of the reasons why any investor going into this should be aware that they may be sold a dog, because at the end of the day, it's better for the promoter to do a bad deal than no deal, because they get 20% of a bad deal is still 20%. It's not 20% of the profits. So I think that from the investors, I think there's a sort of tick. These are potentially interesting, both to institutional investors, and indeed back in the 2008 wave, the vast majority, early 2000s wave, the vast majority of the participants were sophisticated hedge fund investors who realized that actually there was so little risk here, they could leverage these things up to the hilt, their investments in it, because they could always get their money back, and they could borrow against it. So, and now it's becoming more of a retail phenomenon in the latest wave, I think. Secondly, are they attractive to target companies? I think yeah, I think in general, it's an interesting additional source of financing for target companies. And indeed, you know, the more opportunities there are for entrepreneurial or private companies to get funded, the better in my book. And this is an alternative route. Having said that, we ought to realize that we've perhaps got a historically large backlog of private companies that have stayed private for a very long time. And so maybe there are more profitable SPAC opportunities now than there's been for a while, because we've seen this sort of private markets being able to fund things for a lot longer. And, you know, whether they're attractive to investors is also partly contingent upon whether the flow of good, companies available to SPAC companies to acquire is going to continue. I think they provide also, if you're a target company, an IPO is a huge distraction. There's lots of uncertainty about what the outcome will be. One thing that's been getting a lot of airplay in the US, which is the fact that SPACs can give forward-looking statements, which is different from an IPO. And so whether that persists or not, I think that's an interesting detail, but whether that persists or not, I think that could lead to a higher valuation, arguably, because if you can make forward-looking statements about how you think your business for, you know, flying taxis is going to work, you know, you could perhaps get a better value if you could than if you just have one of those prospectuses which just is backward looking, saying so far we've just lost loads of money, or we've just spent lots of money. You know, the forward-looking statements, I think, is an interesting one, which may, you know, is subject to regulation, I think. I think the other reason why, obviously, SPACs are in a sense a sort of alternative to an IPO is that one shouldn't underestimate how, you know, a lot of target companies view the IPO process as itself riven with conflicts of interest, and in particular, the interests of the investment banks. You know, I've done some work with this with the UK regulators, looking at European IPOs. And there is this sort of, we found this quid pro quo relationship between who gets allocated IPOs and the business that the investment bank does with those institutional investors on other business like FX or trading or things like that. And of course, that leads to the incentive to underprice IPOs and to allocate them to investors that you might not want, like their investment bank's favorite hedge fund clients. And so I think that there isn't really that conflict of interest here. There's other conflicts, but there's not that worry that somehow you're going to be promised a certain price, you're going to get shaved at the last minute, and then it's going to get allocated to people that you didn't really want to get allocated to. And so I think that there's, you know, that one of the reasons why SPACs are quite attractive is because IPOs are not very attractive to many investors and many entrepreneurs, I think. And so, you know, that's, I think, and they give some certainty and the ability to raise more money through the pipe, which is sort of, I think, attractive. So I think, yes, it sort of ticks the box. Are they attractive to target companies? Can be. It's not the only game in town. It could be that you get a higher value through an IPO because you're not having to pay the 20% promote to the sponsor or the big equity stake there. So yes, but good to have them as an option. More competition, the better. Are they attractive to sponsors? Well, you bet. You can't think of many things in life which get you 20% or maybe a bit less of the equity of a company, which is unrelated to whether it's a good deal or not. So this is like, you know, this is high octane private equity like financing. With private equity, you get 20% of the profits. You don't get 20% of the capital value. Having said that, of course, you've got huge idiosyncratic risk associated with this. If you know, you put your name on the tin, and if the thing goes horribly wrong, then you can't really expect to raise another one. And indeed, your reputation may be shot if you find some deal which goes very badly. You know, I think there is at least in let's say a private equity fund, you'd have 15 deals. 2 or 3 of them go wrong. It's not it's not good, but if you get 2 or 3 that go really well, then people forgive you because you've got a portfolio there. And, you know, so you've got, from your own personal risk as a sponsor, you are putting that there is a lot of idiosyncratic risk. And I think that, you know, we have seen some which have gone horribly wrong, and it's very hard for them to raise, those sponsors to raise money again. So it's almost like, you know, good as long as it's good. But I think that's not without risks. So just to summarize where you know, the answer to my question, will they continue? I think they will continue. I think that, having said that, what's going on in the US, I would say, is not sustainable, and it will naturally limit itself once the losses come through. And there will be losses. You know, there will be, you know, history has told us that, you know, a good proportion of these SPACs will lose investors' money, and that will give people pause for thought, and the sort of head will come off the sort of the market, I think. I think that from a European perspective, you know, we clearly haven't participated nearly as much in this as the US have, but I think it's becoming rather, I'll end with a sort of political point. I think this is becoming a big political issue in many countries. And I speak from the UK, which is, you know, has got its own interesting issues post-Brexit, but how do countries feel about their best startups going and listing on the US market? It's sort of affecting the geography of listing. And if Europe doesn't make it easy to list on these markets, then we will alter that geography, and we will end up potentially with markets which are full of rather old economy businesses rather than new economy businesses. And that affects, you know, do you want to invest in an index full of old economy stuff or new economy stuff? And so I think, even though this is a sort of political point, I think that will drive regulators to be more permissive. And I look, you know, I think, as René said, you know, there's one rule in the UK which is holding it all back, which is this fact that you should suspend the shares when you announce the deal with a SPAC in the UK. You know, my research would say that's exactly the last thing you want to do, because you want to see the share price response, and you want to see that for a few days while the investors are given a chance to make a judgment on the deal. So regulators are going to have to make the European markets more SPAC friendly, I think, or iron out some of these wrinkles in the SPAC regulations to facilitate these more, because we don't want all our best companies going and listing in the US. So maybe I'll finish at that point, Daniela. And
thank you very much, Tim. I think very, very interesting points. Also, like today with Professor Milos Vulanovic, we published a very short opinion on Fordham University on forward-looking statements. And actually, we raised this point, I mean, that actually the SPAC is the SPAC, and then there is a target company. So there are two different moments. A moment that is the sort of IPO, although quite different from a traditional IPO, and then a de-SPAC moment that is more on the M&A transaction, and so the acquisition moment. And so this possibility also forward-looking statements is the possibility that has been given, I mean, to many, as you said, even Tim, high-growth companies, like in fintech, like electric vehicles. There are some markets that are competitive and are growing, and they didn't have before a chance to get public. Today, through SPACs, they have this chance. And also, I mean, Elenov at the start of yesterday, first day conference, was saying that actually mentioning Virgin Galactic, for example, one of the most important SPAC deal. And so he said that SPACs, they have something to do with it. He said that basically SPACs, they can provide, I mean, financial markets with liquidity, but also they can invest in dreams, in the dreams of business people. The only point that I think is fair, even as a lawyer, is that to dream is good, but I mean, not to mislead investors. So like, as far as probably we, I mean, have always a type of disclosure in place. And also, as I think even René was mentioning, the possibility of regulating these forward-looking statements in order to make them attractive, but even reliable. I think that, I mean, SPACs, they can be a good alternative acquisition model. They can be an alternative path to traditional IPO, and especially maybe in time for high growth companies, as you said, Tim. In this, I think I really agree. And you think maybe this was a question that I was interested in. The fact of the 20%, the compensation scheme, that criticality. You think that would be better to impose a scheme or give the possibility always to the promoter and so to the sponsor to differentiate? Maybe sometimes he can take 10, other times he can, like especially, I mean, Ian Osborne is British, and I think he's a very brilliant businessman, because he proposed a very good structure in Euronext recently, where actually the sponsor takes only the 10% at the start, and then if the value, as you said, of the shares increase, and there is an increasing value of performance of shares also for the investors, public investors of the SPAC, at that moment of the business acquisition combination, then he can increase this kind of promote, only if he creates value. So for example, if a share is traded at 10 euros per share, and then increased at 15 or 20, he increased also his kind of capital share capital.
Yeah, I think my view on this would be, you absolutely don't want to regulate this. You want people to innovate on this structure. But what history tells us is that it isn't great when you don't have an alignment of interest between the investors and the intermediaries. And I think that sort of first generation SPACs, which I'm thinking of the early 2000s, they were pretty much plain vanilla, 20%. That was what you got. And those are not at all aligned. I mean, of course it's better to have 20% of something that's worth a lot than 20% of something that fails, but 20% of something that fails still makes you a lot of money. And I think that that's why we are seeing some innovation in the US. I think that it would be in some of the US SPACs, those sorts of deals where you get a smaller promote and then, some options or something, or profit share, clearly makes sense. And I would fully expect the sort of next generation SPACs to have more heterogeneity here. Because of course, in many markets, it's funny, in financial markets, we often see homogeneity where it shouldn't exist. The private equity market's like that. 98% of all private equity funds have a 20% carried interest. And I think that there's no particularly good reason for that at all, but it just exists. But I don't think that's going to happen in the SPAC market, because I think that investors sort of get it, that 20% of the cap of the shares is not it provides a good incentive to do it, but it doesn't align the interest. So I think we will see innovation there, and that would be a good thing. If we didn't see innovation, then maybe these things would drop out, actually. And that's one of the reasons why we will, because I think that investors, it's very hard to justify why you should get 20% of a company, even if it doesn't perform.
Absolutely. Although, I mean, there is always the possibility to justify on the fact that as a sponsor, I put money on the table. So like I commit some capital at the start, I set up the SPAC, I pay the underwriting discounted fees, and then I work towards, of course, finding a target. One thing that we raised yesterday is that probably if you are a very experienced sponsor, so you have a good track record, you did already SPACs in the past that were successful, this probably, they constitute a justification if there is a track record. But the same 20%, maybe I agree, we should not justify for a first-time sponsor, for example.
And the other thing I would say is, if you've done a successful SPAC in the past, you're rich, right? Do rich people shouldn't they actually sort of like put some of their own money at risk here? And actually not just have an outcome that is, heads I win, tails you lose. It's sort of, so I think that people are increasingly of the view that this is not quite the way that it should work. Great, you've been successful in the past. Well, if you're successful in the past, we're prepared to give you a higher sort of stake if it's at risk, so maybe we'll give you something which, if you're successful, you'll earn even more money. But why should it's the lack of downside risk that's the problem. Having said that, as I said, the main downside risk is reputational, and which is a big one, because that does stop you, that would be a big pause for thought. But I do think that it shouldn't just be reputational. I think that it should be contractual as well. And I think that, we're starting to see that, but I rather think that the repeat sponsor should be thinking about the way that they structure the deal and who gets what when, very carefully. And I hope they do that, because in that way, the market will succeed and flourish. And if they don't, they just say, okay, I've been successful in the past. I don't want any risk anymore. Give me 25% of the capital. That I think that's being greedy, and ultimately greed could kill this market.
Yes, I agree. In this, I think everything should have a balance. And then, as you said, I think even this big boom of SPACs in 2020 is because the interest rates, also bonds, they were not very appealing. And then I think in every financial crisis, there is always a big role played by equity market. It's always been like that. So it's even one other justification why in this moment we had a growing moment for SPACs. Although then we have, of course, always other reasons that rest, as we said yesterday, for example, in the self-regulation argument. So how in some way the flexibility and financial innovation actually, as even you touch a little bit upon this, is like an asset class. You invest in innovation, you invest in bonds, you invest in stocks. So it's something that today we have seen many times, even Bitcoin. Bitcoin is a big financial innovation. We don't know how to regulate Bitcoin. And in some way, in front of financial innovation, I think regulators, they always have questions, and it's very challenging to regulate and be at the same level, because as you said also, the SPAC market is evolving continuously. So we are seeing continuously new structure of promote, new structure of warrants that before were not fractional, now are fractional. Then even new structure in general, how the deal even is performed at the moment of this SPAC phase. So we had forward-looking statements. Sometimes we have other type of contractual provisions, to facilitate this type of deals, like the pipe investment and so on. So it's something that, opens even the doors to many other markets. And it is, and one point very interesting, I think, is when you touch upon the political side, and that is the inflow and outflows of money between countries, and how this can be something very important. And
I think that will ultimately be really important here, because my interpretation of SPACs until recently was that, certainly within Europe, is that they were sort of something which regulators were a little bit wary of, and that they were not very permissive about. Some of the exchanges had rules which were not very permissive of them. They used to be called, cash shells, and things like that, which were a bit pejorative in a way. And I think that a lot of the exchanges, not all of them, but a lot of the exchanges are playing a bit of catch up here, realizing the bigger political issue, which is if you want to change the FTSE 100 from being dominated by miners and by, sort of old economy companies, you're going to have to attract new, young, high growth companies. And SPACs, for various reasons that like I said, a lot of SPACs, a lot of entrepreneurial businesses do not want to do an IPO because they don't trust the investment banks, or for other reasons, because they want certainty, and they want to, still have control and things like that. And SPACs do give that opportunity. And I think that there's a little bit of catch up being played at the moment. Maybe there are tons on Euronext, but there haven't been. I would say Europe has largely missed out on this wave compared to the US.
Yes,
that should be a wake-up call.
Yes, of course. I think I would like just to conclude on the fact that I believe, I don't know if you agree with me, but London Stock Exchange with this reform is the first, and is very right to say. And I think even Alex in the round table will have some questions on the speakers. but actually, I mean, is an emerging market on the stock exchange in SPACs, and they are implementing one very organic reform. So very competitive. In fact, here is the political argument of competition. Euronext that wants to harmonize because it's Europe and the London Stock Exchange that can take from America that actually is the brother, sister, and so on. And this is quite nice in the sense that I do believe that London Stock Exchange can really emerge as a SPAC hub in Europe with a sophisticated financial framework that very likely, I mean, should be implemented very soon. I think by the end of this month, I think, possible.
Yeah. No, I think so. And I think that the Hill report was really positive in that respect. And indeed, you know, I remember speaking to the team behind that and making this point that, you know, SPACs are an important, you know, it's not like a dodgy area of finance that you should be sort of pushing down on. There are significant issues about it, but handled well, not just by the exchanges and the regulators, but also by the investors. That this can be a very useful option for private companies and a way of reinvigorating the sort of flow of companies onto the public markets, which is the sort of overarching view of sort of mandate of the Hill Commission was to sort of look at that. So I do think the UK may change quite dramatically. Historically, of course, again, going back 10 years, there are a whole bunch of really big SPACs on the UK market. It's just we haven't had many recently.
Absolutely, I agree. Thank you very much, Tim.
Thank you.
Thank you. So I think we will move in the last round table, and there is Alex Katsomitros from World Finance magazine in London that will moderate a panel discussion with Ferdinand Mason from White & Case, always Tim Jenkinson from Oxford University, and then we have one of Professor Filippo Annunziata from Bocconi University, professor in financial markets, and also one of the organizers, I mean, of this conference with Bocconi University and the other sponsors of this conference. Thank you very much.
Thanks, Daniele. Hello from Paris, from France, which celebrates its National Day today, by the way. My name is Alex Katsomitros. I won't ask you to pronounce my last name. I work for World Finance, and I will be moderating the next session, which I believe is the final session. I'll very briefly introduce our speakers. Then I will ask a couple of very generic questions just to start the conversation. And then we can move on to some questions posed by the audience. I have some very good questions here. I'm not sure if we will be able to tackle all of them because we have just half an hour, but we'll do our best. So our speakers, I'll do it alphabetically. We have Professor Filippo Annunziata from University Bocconi in Milan, who specializes in commercial corporate banking and financial law with specific focus on comparison of legal systems. Then we have Professor Tim Jenkinson, whom we just heard from the University of Oxford. Professor Jenkinson is the director of the Oxford Private Equity Institute and one of the founders of the Private Equity Research Consortium. And of course, she's one of the leading authorities on private equity and IPOs. And last but not least, we have Mr. Ferdinand Mason, who's a partner at the merger and acquisitions branch of White & Case, the prominent legal services firm. And of course, Mr. Mason can give us the legal perspective. So I'll just start with a couple of generic questions. Actually, we can pick it up from where Danielle and Tim left the discussion. So we talked a bit about Europe and how it's lagging behind the United States in this area. There seems to be a bit of action, a bit of SPAC activity in Europe over the last few months. And Amsterdam seems to have an early lead. We just heard the perspective from Mr. Van Vlerken from Amsterdam. And as we discussed, there is a push to make the city in London a bit more attractive for SPACs. So my question to the panel is, which European market, which stock exchange do you see emerging as Europe's SPAC hub, as the center of SPAC activity in Europe? And we can discuss about the legal aspects, the financial aspects, perhaps the technological aspects as well. So I guess we can do it alphabetically and start with Filippo Annunziata.
Yes, hello everybody. Thank you for inviting me to this panel. Well, actually, in Italy, we've had quite a momentum on SPACs. Until a couple of years ago, everybody was sort of very active and excited in this new phenomena that seemed to combine, the usefulness of being listed with simplification on the listing process. As we know, this is one of the top assets that a SPAC can offer. You get listed without going through the entire procedure. Also, Italian corporate and markets legislation proved to be quite flexible in adopting this innovative scheme. We didn't really have to turn upside down the existing rules. We didn't have to introduce new principles. We were able to sort of carve into the existing legal framework the SPAC scheme without too many difficulties. But ultimately, the SPACs then boiled down, lost a lot of interest. And one of the reasons why this happened, I actually lived this experience in first person, because I was appointed as one of the directors of 2 or 3 SPACs that at the time were on the market. One of the reasons why the market sort of boiled down and apparently lost interest in the SPACs was, first of all, the difficulty in finding suitable target companies. And the very strong competition that is still going on between SPACs and alternative investment funds, private equity, venture capital, is sort of, slimming down the potential target market for SPACs to look at. And this means that the price for target companies is increasing, or at least had increased. And most of the transactions for a SPAC didn't make any sense anymore, because the target companies were becoming too expensive vis-a-vis the high competition with private equity funds. The second reason is that the original structure of the SPACs in Italy allowed investors to buy the shares of the SPAC on the market up to the very last minute before the business combination was announced. And then when the business combination was announced, investors had a legal right to withdraw from the company and to have their shares liquidated in cash by the SPAC. They simply had to say, I don't agree, I don't like the business combination, so give me the money back. At that point, the money would have been paid back on the basis of the market price of the shares of the SPAC. And this ultimately led to some high speculation on SPACs. And some SPACs had to face serious difficulties because they couldn't really immediately pay back. They didn't have sufficient liquidity, or they couldn't pay back the shares to the shareholders that were withdrawing at that time. So the market apparently lost interest in SPACs, but now it seems that we have a new season. We have new SPACs on the market. I'm pretty sure that this was also the consequence of the high interest that the US market showed for SPACs over the past months. And we have a tendency to follow fashions in Italy, and not just in the fashion world, but also in the world of finance. And I will explain later on what are the measures that have been put in place by the new SPACs to address these two issues that led ultimately to the boiling down of the strong interest in the first era of SPACs. So there seems to be a positive future for SPACs in Italy, but naturally this positive future depends on how these new generation SPACs, which have just come out on the market, will perform over the next months.
Sure. Thanks, Professor Annunziata. Let's move on to Professor Jenkinson. Professor Jenkinson, can the city become Europe's leading hub for SPACs? And maybe you can tell us a bit about the reforms proposed by the FCA. Are they in the right direction?
Yeah, I think so. I'm trying desperately not to be in a sort of, just to go down nationalistic lines on this. And but I think that there will inevitably, we see in the IPO market that there's a very much a nationalism associated with IPOs. So if you're a Italian startup company, you're more likely to go public, do an IPO in the Italian stock market than in the German stock market, and similarly for the German stock market. So there's naturally, to some extent, what the leading SPAC market is going to have an element of just where are the most the most suitable companies that are looking to go on the public market. Leave that aside, because that's in a sense always going to be the baseline, is you'll get your domestic companies going on SPAC. If you like, I interpret the more interesting question is, where do the really successful companies go? Because they've got a choice here. And I think that at the moment, the top European companies are, I think, thinking between the US and to some extent, I would say they're thinking, I think that there's a good chance that the main competing alternative will be London, just because of the size of the market, the level of the analyst depth and things like that. But I do say, I think that's for certain sectors. It may be a bit sector specific, because for example, the fintech side might well go to London. It might well be that if you have SPACs in different sectors, they're more likely to go to European exchanges. But there are obviously certain advantages that London has over many other markets, just in terms of its depth and strength of advisors, and the fact that the vast majority, or it is pretty much the vast majority of the largest IPOs in Europe are managed out of London still. And so whilst these aren't IPOs, they're SPACs, I think that there is that chance. Having said that, so I do sort of expect that to happen, but if the reforms go the right way, and I think those reforms are likely to happen, the fact that I think that the sort of forward, the suspension argument is the killer at the moment, so having to suspend the shares because it's deemed to be a merger. And so in a sense it is a merger, but it's not a normal merger. So if normally two firms merge, then you suspend the shares, and I think that one has to be got rid of, and I think it will. I don't see any good reason for keeping it. Most other countries don't have it. If that comes off, then yeah, I think my money would probably be on the London market being the place that the sort of internationally mobile European company goes to, a bit like, we've seen with a couple of the big fintech companies recently, Wise, for example, sort of going public in London rather than, big Estonian company chooses London. So I think the big choice for them will be, do I go to the US actually? And that's if you like, the bigger goal is, with my European hat on, not wishing to be nationalistic, I'd rather that we had very strong European markets than we did the US, and I think that's going to be the challenge. The US is a pretty strong competitor.
Sure, I guess this is just a small part of the bigger debate about Brexit and whether the UK and the city diverges from Europe, right? So this is just one part of it. Ferdinand, your thoughts on this? We can't hear you, I think.
I have Thanks, Alex, sorry. I have a bit of a problem. I'm not an economist.
We can hear you now, so it's fine.
Yeah, okay, super. I'm not an economist. I'm not an academic, terrible at school. And I represent venues. I represent sponsors, represent targeted companies at the moment, more targeted companies than sponsors for whatever reason, because that's the way the market's moving. And at the same time, I'm based in London and I'm also Dutch qualified. So I've got to be very, very careful in what I say. I think what you do see is, I think, look, Amsterdam has done a great job in managing what has come their way. What Renee may not have mentioned is that they have about 39 SPACs in the pipeline at the moment. So maybe it's more now, but so they've done very well. The regulator, I think, has taken the lead in terms of absorbing these. And I think the Amsterdam regulator has always taken a certain lead in new products. Dutch corporate law is basically the Delaware of Europe. So there's a lot of flexibility there, as we know, Fiat Chrysler, Ferrari, Envy. So I think the way the market is kind of dividing up, and I'll get into the UK in a second, where I am based and registered as a lawyer. So I think the market has divided itself up. to a certain extent. You've got the US, where we've got a lot of lessons that we've taken on board in what we're doing. So we're basically replicating a lot of the improvements that they have basically generated and implementing those in Europe. I think what we're seeing is Amsterdam right now is number one. I mean, the numbers speak for themselves. I'm not going to get into that. That's clear, and that's very factual. We've got Paris, we've got Frankfurt, which we usually list via Luxembourg entity. And we have, Brussels is opening up. And I think you've got a lot of fintech going into Amsterdam, some fintech going into Frankfurt, but then geared towards the German market or the DACH market, so Switzerland and Austria as well. And then we have Milan, which I call at the moment, which I hope doesn't sound insulting, but creates a lot of flexibility, the micro SPAC market, where a lot of creativity has been tested, and we see a lot of specific target companies looking at that market. I think London, and we have at the moment on the D-SPAC side, we're doing 21 with a European angle. On the SPAC side, I don't even want to tell you the number, it's crazy, but we are now preparing SPACs for London as well. And what we see, and we've got some trophy SPACs, it's leaked in the press, I don't want to repeat them, but you just do a Google, you'll see which ones they are. And what we're seeing at the moment is that primarily UK-based sponsors are looking at London, which kind of makes sense. Sponsors in the US that are more comfortable, for whatever reason, historically, etc., with the London market are looking at London. And what we're also seeing is that Middle Eastern sponsors, who are quite prominent at the moment in various deals, are looking at London as well to acquire Middle East, potentially Southeast Asia, Asian targets as well, just because of the familiarity with the market. The flexibility that London will offer, and we're close to those rules. I don't want to get into too much detail as a firm, but the flexibility that it offers is very similar to what the other jurisdictions are doing, and London has had the benefit of learning from the other jurisdictions. What London has done is set a threshold at £200 million, which kind of sort of clears the market up a little bit. That may go down, by the way, as part of the consultation process, but it's not definitive yet. And I think what you will see is that there will be a natural division in the market. So, and I've just talked through the European market, the Euronext markets, the Frankfurt market, and I think there will be a very natural divide dependent on where the sponsors are from and what type of target businesses are they doing. In reality, if we've got a UK SPAC going to buy a German family-owned fintech company or buy into or IPO it ultimately, the question is, would a German family-owned business really have appetite to be vulnerable and listed on the London market? I don't know. Sure. That's something for the market to decide.
Sure. Thanks a lot for your insights. I think we can move to questions posed by the audience because we only have 20 minutes or so. Let me. We have a question that touches on the legal aspects of, I guess, by Georgia. Is there any clear answer as to whether SPACs can be characterized as collective investment undertaking, so that their managers can come under this regime? Does anyone want to tackle this?
Well, I will step in because yep. I've been challenged with this question several times, and the answer I would provide is no, because a SPAC, at least in its traditional structure, but a SPAC doesn't have a diversified portfolio. It is only targeting one asset. It is true that the new SPACs that we see now, especially the second generation SPACs that we now see on the Italian market, are sort of setting out an alternative structure whereby the SPAC will not merge with the target, but it will be a sort of a holding company that will eventually carry on further increase of capitals on the market, collect new monies, and invest in the second, third, or fourth target company. And ultimately, this may lead up to the creation of a diversified portfolio of investments, all under the same holding SPAC company. But my opinion is that even in that case, you would have a sort of diversified portfolio, but the SPAC wouldn't be acting on the basis of a predefined investment policy, which, as we know, is one of the key elements of the definition of what an alternative investment fund is under European law, because it wouldn't do that under stringent commitments and rules of portfolio diversification, use of leverage, as is typical for an investment fund.
Sure, sure.
If I may just add to that, Alex, is that okay?
Yeah.
So the ESMA was asked for guidance on how SPACs should be treated under the AIFMD. Unfortunately, that guidance wasn't really given, and that was 2011. And I think what we were discussing earlier, you know, we've got the Euronext markets open for SPAC. Most of the markets, most of the entry points are. We've got Frankfurt. It's time that the regulators really get together and make sure that we all understand each other in terms of what we're doing, because it's really very, very difficult when you're dealing with a CSSF for a Luxco that's going into Amsterdam, and you've got the various views of the regulators, which are still not really aligned, although it's a lot better than what it was a year ago for sure. And what we do see under the AIFMD regulations, like Filippo said, we've got no real tight investment policy, right? We keep it really broad. Have a look at a SPAC prospectus, and you'll see that it says we like fintech, but it could be anything else. we like the European markets, but it could be LATAM. So we keep it as broad as possible, just to make sure there's no applicability of the directive.
Sure. Next question is something I think that has bothered policymakers and regulators. Is there a scenario where investors could lose money even with a redemption right? And I think that's something that has become more topical.
Well, I'll answer that. Absolutely. Yep. You just got to hang on to it. So you can lose plenty of money on SPACs if you continue to hold on to them and they go down in value because they weren't good deals. So that's the classic way. If the more narrow question is, can these default somehow, and do they not have the money? Are they not good for the money if you ask for it back? I think I defer to a lawyer. My understanding is no, the money's in trust, and so you can't lose it. But as I say, bring on a lawyer at this point, I think.
Yeah, I think that's right, Jim. The monies are held in an escrow or in trust. The escrow product is very clear. So that's why we know that if you add all the amounts that are held in trust together with the leverage that they could potentially utilize to do it, we're looking at about $1 trillion at the moment, and it's all verifiable. It's just sitting there ready to be deployed. So your money is safe. However, I would suggest you read the prospectus as well, just to be really clear. But generally speaking, exactly in line with what Jim has said, there are sufficient safeguards for investors.
Sure. We have another question that's somehow provocative. Are SPACs good for lower quality firms? And we have seen, I wouldn't say trend, but there is a debate about tech companies which have all these forward-looking scenarios, and in some cases they don't even have a product. So are SPACs good for all kinds of companies or just for specific companies?
Well, I don't mind having a first bash at that. Yep. I think that, there is certainly the case that, you can probably take, if the question is it more likely that a very speculative company will go public via a SPAC than it would through an IPO? I think the answer is probably yes. because there are fewer constraints, because sometimes, you know, the exchanges put on various sort of constraints on the IPO process, or the regulators get more involved. Having said that, you've still got to convince the investors, right? So that it's sort of, it is the case that you will have to comply with all the rules when you get on the exchange, but it might be easier to convince investors through the SPAC process, because you've got the promoter who you're really betting on. So I suppose, you know, if some extremely well-known successful businessman or woman comes along and says, we're going to take this super early stage company and take it onto the public market because this is the next Tesla, you know, there's a good chance that they may succeed. So possibly, but that's not necessarily a bad thing, right? I mean, it might be risky, but actually giving investors the opportunity to get in on the early stages of some of these, you know, very high risk but potentially very high return investments isn't necessarily a bad thing, although obviously regulators are worried about retail investors. But in general terms, I'm not, you know, we are in the business of risk capital, and it's not necessarily a bad thing, I think.
There's always risk in investment. I mean, we cannot get away with that. Does it make sense for a SPAC to invest in several companies as opposed to investing in a single company?
Shall I just quickly talk about the legal constraint there?
Yep.
So generally speaking, a SPAC is geared to a single asset acquisition. Just because under all the rules that apply, and I'm now being a little bit universal, there are some differences here and there, you need to use at least 80% of your cash that you've acquired as part of the fundraise. Right. So you're basically stuck with that. You can do anything you like with the rest, with the remaining 20%. So what you do see is that sometimes one or two de-SPACs or one or two deals are done at the same time. We have one SPAC at the moment looking at two fintech assets in LATAM, and it just shows you that the market is moving everywhere at the moment just because of the lack of targets. But they are putting two together, and it's a nightmare. The max, I think the record is 6, which was done in 2019. And the lawyers involved had black hair at the outset and were gray at the end of it. It was really a nightmare. So it usually is geared towards a single asset.
I think that kind of settles it. We have a very specific question. I'm not sure if anyone of you can answer that. Do SPACs contravene Islamic finance principles? I know it's a very specific question, so if nobody feels confident enough to, we can just...
I can just throw a little bit. Yes, this is a big question. I mean, because I mean, we don't have an Islamic compliant SPAC, but actually, yes, there are some problems because the units that usually are composed by common shares and warrants can be tradable in a separate way, usually in a normal SPAC transaction. Under Islamic finance, no, usually this warrant has to be attached to the share. So there are some criticalities, or also, of course, if I am a SPAC and I'm going to acquire an haram, it means prohibition. So for example, I don't know, I want to acquire a company that is selling alcohol. That is something that I cannot do under Islamic finance principle. So I mean, there are some things, and actually in Turin, in the International Islamic Forum, I will give in October a speech about that. So I'm working a little bit on this, even with Professor Habib from Durham University. And we are trying to see how this can be possible. But it's really something that it's a very interesting question, yeah.
Sure. I think since we only have 5 minutes, I think we can kind of wrap it up with the last question. I think it would be fitting for a conference entitled "Are SPACs the New IPO?" You know, to offer this question to all speakers and give them 1 or 2 minutes to answer. Because maybe I can just give a bit of context here and say that there's been a debate about the decline of IPOs on both sides of the Atlantic, and we also see new trends like direct listings. So SPACs is, in a way, an interesting trend, an interesting addition to this debate. So can they offer a new lease of life to IPOs? And we can start with Filippo again, alphabetically.
Yes, sorry, I had to drop off, so I lost the question. I'm sorry.
Yeah, so the question is the title of the conference: Are SPACs the new IPO?
Maybe, who knows? I would like to point out here something which I don't know whether it came up during the first part of the seminar this morning, but in Italy, SPACs are IPOs, yes, they might be the new IPOs, but ultimately, virtually all the SPACs that we've had and we have today are listed on an MTF, not on the regulated market. And this allows much more flexibility in terms of applicable standards, because AIM Italy, whose regulations were mirrored on AIM UK, but at the same time adapted to Italian specificities, do not require the same requisites in terms of corporate governance requisites. So they're much more flexible. So they are IPOs, but they're not true IPOs. If by IPOs you mean getting listed on a regulated market. And this is, I think, is interesting. I have no idea whether this trend will continue in the future, but it's what happened in the past and what is going on at the moment. So they are new semi-IPOs, let me use this expression, because you don't really end up by having a truly listed company. You have a company whose securities are traded on an MTF with a lot of opt-ins and opt-outs from the basic standard of a true regulated market.
Thanks, Filippo. Professor Jenkinson, your thoughts?
So I think that it's been, the IPO market, the traditional IPO market had been subject to very little innovation for a couple of decades, I would say. And having converged on the US system of book building and the role of investment banks, it then stagnated for a while. And I actually think that direct listings, for example, which are, I think there's a big future for direct listings. I'm very bullish on those, especially actually for some private equity funds that I think should start using these a lot more. And SPACs are in some ways just a different route to the public market. They're not really an IPO in the normal sense. But I think that, they give another route. And that is really important because it keeps people on their toes. It means that the investment banks have to, cannot just say, oh, there's only one route here, this is the way, and you've got to pay up your 4 or 5%, 6%, 7% in the UK fees for something which is, not rocket science, So I think that I think competition is a good thing. I think that as long as it's actually well regulated and people know what they're doing, this is an attractive alternative route for private companies to go onto the public markets. And there is this sort of overarching worry that public markets have been shrinking. There's half as many listed companies in the US and the UK as there were in 1990. And so, and that's good because it allows for more general participation in equity markets, which I think is a good thing without having to go through complex vehicles like private equity funds. So in general, I think they're another route to market. I think they'll persist, but they're not replacing IPOs. We'll still, I would predict in a typical year, we'll have more standard IPOs than we will direct listings or SPACs. There'll still be, the majority will be an IPO, but hopefully it provides a bit of competition, and IPOs may get better as a result of having SPACs. I think.
Fantastic. Thanks a lot, Tim. Last one, I think, is Ferdinand. Your thoughts?
Yeah, thanks, Alex. I think it's an evolving market. It is very clear that there's a flight to quality at the moment. The bigger usual suspects in terms of banks are now getting involved. The sponsors that we're seeing coming up and still managing to fundraise, including the PIPE investment, are high quality. PIPE investors are being very critical into what they invest at the moment. So the BlackRocks of this world, which is really good in terms of making sure that long-term this is a sustainable business. But I think it's definitely here to stay for a while. Flight of quality will continue, but we need to think about the next phase. So if you have a European fintech business geared towards emerging markets, listed on NASDAQ, and for whatever reason, new regulatory landscape is created in the US that limits the jurisdictions in which this fintech business can operate, are we ready for that? Are we ready for spillover of regulatory limitations into other jurisdictions which we've not naturally had? So when NICE and Euronext merged, they created a structure. We worked on that to avoid spillover of the different jurisdictions. I think this is just something to think about in the future. Thank you.
Fantastic. Thanks a lot. I think we can wrap it up there. Thanks a lot for your time, for participating. Also, thanks to the audience for participating. We had an interesting mix of Italian and English speakers, which is quite interesting given the Euro final last Sunday. I think I can pass the floor to Daniele, perhaps for closing remark, since he organized. And also thanks for Daniele for organizing this conference.
Thanks, Alex, and thanks also, to all the speakers of today, starting from Professor Iris Chu, Mr. René van Velkeren from Euronext, Filippo Annunziata, Ferdinand Mason, Tim Jenkinson, Milos Bulanovic, all the speakers also of yesterday. I think it was very productive conference, and I think we have learned a lot. Actually, I've been invited in other conferences on SPACs. I have seen many times other speech on SPACs, but I think we have reached a very good conclusion on some points that many times maybe are not always addressed in the SPAC arena. So we raised, of course, the issues of the dilution and the issue on creation of values, but we have also on the other hand addressed the point that SPACs they don't compete actually with traditional IPO. They are just an alternative way that is there. So the issuer is free to decide between SPACs, traditional IPO, in New York especially direct listings, that now they have even been reformed since last year with direct floor listing. So the possibility now is very open. And this, I think, will be determined then in the future how much regulation will be put in place. And especially, I think the point of Tim was very brilliant, I think, on the political side of SPACs. And that is for sure something that in the future will trigger new regulation, or the countries that are more competitive maybe are the countries that they put less listing requirements, and so on and so forth. So thank you very much, everyone. And thanks, of course, to the sponsor of this conference, that is Sellenhoff, Grossman & Scholl, and then the collaboration of University, Bocconi University, EDEC Business School. And I will leave maybe the floor to Rodrigo with the final word as the leader of Queen Mary, of course.
Daniele, thank you very much. A big thank to all participants, speakers, you, Daniele, for taking the lead in organizing this, our strategic partners, EDEC and Bocconi. It has been a pleasure to host everyone, and I just wish that this becomes an annual event. So I would suggest to stay tuned as we are very keen in hosting you again in a year's time. Thank you very much to everyone, and stay safe.